And after we get a chance to take a look at the news, to see our tip of the day, we are back with Dana Sender, market analyst, Yaron Mazor, market extraordinaire. Let's see how we're making the market into trading opportunities and talk a little bit about, are there any when the market is so crazy? So Dana, the last time we've talked, you've mentioned that you're a little pessimistic as to everything that's going on. You see 2008 moving in front of your eyes all over again. And let's start with the S&P 500 and William Dudley's statement yesterday that a rate hike will not happen anytime soon. What is that doing to the market?
First of all, I must say that I'm still pessimistic. I'm not buying what's happening at the market.
You're not buying it.
I'm not buying it.
All of these appreciations, you're like, not so much.
The market, if you look at the S&P yesterday, break it down per hours, you can see it started very strong.
Yeah.
Probably corrections of what the things that are happening in the past week or so started, and then it weakened. And you can see the volumes are much higher than used to be. The volumes are coming back to normal. So it started strong, weakening, and then comes William Dudley.
And then
comes William Dudley.
And then comes William Dudley.
Yeah, and then he says, of course, we can't see a hike. He says that it seems less complying than a few weeks ago. And that's the reason that the market just flew. And you can see, if you're looking at the graph at the moment, from yesterday, noon US time, it just exploded. We talked about explosion last time.
Yeah, skyrocket.
Yeah, definitely. And then let's go to China. What happened this morning in China?
What happened
Again,
this morning
started very slow. The market was even negative at I think around noon also at China time. And then started buying. The government just started
intervene, pumping in money, injecting more than $30 billion.
Something like that.
Trillion.
And you know what's the reason for that? I think what people are doing to the market, what Dudley did today, what China is doing this morning, is trying to pump the market, trying to put it back on wheels, but it's not real economical improvement that we can say we are above, we are over the
it's not that the market corrected himself, it's the $30 billion that the Chinese government just pumped in. So basically it's not money moving into the market again, but it's money that is being aimed to healing. It's money that was not supposed to be
to stimulate the market.
In the market.
It's a way to stimulate. They're doing a lot of actions at the moment. They're stimulating through the equity market. They're stimulating through selling USD.
This is their sixth action.
I think that they're trying to duplicate Fed action from 2008, and as the Fed was successful to manage the crisis in 2008, and those are the same signs or the same actions, but this time I think it's going to be a bit different, and I'm expecting that the market will collapse. But as we mentioned 3 days ago,
so you're more pessimistic today? You're
no, I'm not pessimistic.
Okay.
I'm saying the following.
Okay.
First, on Monday, we were here on Monday when the market was crashing, and we said that the market is going to correct.
Right.
This is not the beginning of the big crisis.
Of a sell-off.
Yes. Yeah. And we said that as the market was depreciating sharply, and day after the show, the market bounced on Tuesday. And yesterday we saw another rebound, and of course it comes from Dudley, it comes from China, it comes from traders that are looking for opportunities, and investors that are trying to find the bottom. And I think it's a regular way, or it's a typical way to find bottom. It's called the bottoming process, and we are around the bottom as for now. This is a temporary bottom. That's why I told you today we have a great opportunity, because we have consensus and we know what's happening. And this is the most predictable asset in the market. When the market was under turbulence, gold was the only one to appreciate and to present strength. And today, when the markets are coming down, the volatility is a little bit lower. Gold is not considered as a safe haven asset again. And this is why I believe that gold will break down below 1,120 before the end of the trading day. I'm going to select 3 different expiry times in order to divide our risk exposure as well. I'm going to take 115. This is the first expiry time. I'm going to invest or risk $25 US put position as
Sending
we
it to
believe
the downside.
as we believe that gold will depreciate today during the trading day, of course, and I'm going to select 2 p.m. This is the second one.
Dividing our risk.
Absolutely. And the last but not least, it's the end of the day.
End of the
8
trading
p.m.
day, 8
GMT
p.m.
time. It is also the closing time of the US stock exchange. And by then, I'm expecting that the US market will have another rebound and gold will depreciate.
So the GDP today.
We have GDP.
We have
right.
GDP. If the GDP will come
in
better than
yeah.
expected, I'm with you on this trade. Yes.
Now,
Amazing. I'm
the
excited
last
about this.
3 prints we predicted we predicted it in an accuracy of less than 0.1%. The capacity utilization, the CPI, if I remember right, and another one.
Yesterday you saw the durable that it was
durable goods was much better than expected.
Much better orders.
And the GDP is going to be a bit higher today. It's going to be around 3. Every
Still.
print above 3.2, and I'm going to take call position on the S&P and the Nasdaq until the end of the day. I think that the market is pricing in better than expected print. We can already see. We can already see the movement, the speculations. Speculations are in favor of positive GDP print. It's a preliminary one, and the preliminary one, of course, is much more important than the final one, as it's the first time. It's the first one to be released.
3.7%. Woohoo!
That's a nice one.
Yeah, that is a nice one. Forecast was 3.2. We have 3.7.
Yeah, as I mentioned, it should be much better than expected. Usually we are not predicting, but this time we have it's not a hunch. We know what is going to happen in the market, and that's why we took positions against gold. Take a look at gold. Amazing. Okay, call positions on the Nasdaq and the S&P 500. Let's take a look at the gold movement. Let's take a look. We are way deep in the money. It's going to hit. It's going to hit our target. Take a look.
We give special effects.
All
in
our
the
positions.
There's no money for special effects, so Dana and myself will do
all the
them.
positions are in the money. As I mentioned, until the end of the day, gold prices should break down 1,120. It's already happening much faster than I expected.
But so even when we think that we really have a trading opportunity, when we have a hunch, when we have researched the market enough to understand what's going on, we are still lowering our risks in days that are so crazy in the market, and we were able to make trades that most chances will come in the money.
Let's take a look at the gold movement. Let's take a look. We are way, way deep in the money. It's going to hit. It's going to hit our target. Take a
We
look.
give special effects.
All
in the
our
studio.
positions
There's
are-
no money for special effects, so Dana and myself will
all
do
the
them.
positions are in the money. As I mentioned, by the end of until the end of the day, gold prices should break down 1,120. It's already happening much faster than I expected, but this is the right way. This is where gold should head to today. And of course, my personal account is also gaining, and I'm having fun today.
You're having fun today. As the market is in a complete dystopia, here in the studio we have a complete utopia. Yaron and Dana are thinking everything, are totally in...
I must say I'm amazed. Seeing the GDP, I'm amazed.